Good morning, ladies and gentlemen. We hope you had a great time last night and are ready to continue the second day of the Finance Magnates Africa Summit. Before we start, we'd like to give a quick reminder to all that online trading involves the risk of losing your funds. Make sure you understand all the risks involved, exercise caution, and trade with brokers you trust that hold the appropriate license by the FSCA. And now, for the first workshop of the day, I'd like to welcome on stage Mainda Kayoba, Director at Pro Trading Africa. Thank you.
Mic check, 1, 2. No, thank you so much for the introduction. He was actually asking about my name. It's like, is it Mainda Kayoba? All right, guys, my name is Mainda Kayoba, founder and director at Pro Trading Africa. Now, for those who don't know, I've been in the financial markets for the past 7 years. Worked for alongside multiple companies that are here. Firstly, as accounts manager as well as a business developer, Now, the reason why I'm actually emphasizing that is because I had the privilege of speaking to so many traders, across, Africa. And I picked up a few common mistakes, that I think we're going to, touch on today. And I believe it's going to help you, make more informed decisions, in your trading journey. Okay? All right. So today, so by the end of the presentation, you would have actually have a better understanding about, Okay, before then, I've actually, sort of like, I would say, okay, the first part is going to be the easy part for first-time traders, because I was actually having a conversation with one gentleman here. He hasn't been trading for some time, and I think yesterday there was also an elderly couple, You could tell that they're very much interested in trading, but, it was the first time trading. So the first part is going to be the easy part. Then the second part is going to be the fun part, where I'll be sharing more information about, let's say, fundamental analysis, how you can actually go on the right way, right? So by the end of the presentation, you would have actually have a better understanding of, trading, what the concept of trading, distinction between fundamental analysis as well as, technical analysis, the techniques that you need to use to integrate both fundamental as well as technical analysis, and strategies for effective risk management, which is very, very important, especially if you're starting off in the industry, okay? Now, I think the first question that one would want to ask is if you getting started in the industry is, what is trading, okay? Now, trading is simply buying and selling on the financial markets, all right? I'll be saying we a lot as like traders. We buy when we believe that the market will increase in value, and we sell when we believe the market will definitely decrease in value. Simple as that, right? Now, the next question would be, what is traded on the financial markets, right? I've actually listed down 6 asset types that you can actually take advantage of, which are provided by most companies here. The first one is like well-known, which is Forex. I think everyone here, when you speak about trading, they're like, Forex, right? Now, for those who don't know, you can trade Forex. We normally trade it in pairs, like for instance, Euro USD, CAD JPY, as well as USD ZAR, okay? Now, you can also trade some shares. You can trade also indices, like S&P 500, as well as your NASDAQ, okay? You can also trade stocks, guys. These are companies that you and I probably use on a daily basis. Like for instance, Apple, BP, Microsoft, Yesterday, actually, saw a post. There was a plane, apparently it was flying from London to Singapore, and I think there was a bit of turbulence. Unfortunately, it was a horrible incident. One passenger passed on, Now, the question is, what if in the next couple of days, there's, talks that probably one of the radars or sensors actually malfunctioned? What do you think is going to happen to the shares of, Boeing? It might drop, right? So we don't only trade Forex, you can also trade, stocks. There's a whole lot of asset class that you can actually take advantage of. Now, you can also take advantage of cryptocurrency. I think the most traded one, of course, is Bitcoin, okay? We've got Bitcoin, we've got Litecoin, we've got Dash. There's a whole lot of, options that you can actually take advantage of. I hope next year I'll be back so that I can actually touch more on the crypto side. Then you can trade commodities. I think the most traded one, of course, is the gold, silver, as well as crude oil, okay? In terms of gold, the gentleman from, I think, Exness, he touched on it yesterday. He said that according to him, he's seeing gold going up to 3,000 US dollars. Okay? Simply because, as we know, gold is like a safe haven. When there's uncertainty on the financial markets, investors tend to go to gold, right? So, guys, those are the assets type that you can actually take advantage of, which are provided, like I said, by most companies here, brokers here. So we don't only trade Forex, okay? Now, the question is, who actually trades the markets? Okay, guys, we've got institutional investors. We've got brokers that, of course, place trades on behalf of clients or traders, as well as banks. Banks do trade. I'll actually explain a bit more a bit later. As well as retail traders, you and I, okay? Now, the thing is, okay, Mainda, I've got this chart, I'm very much interested in trading, right? Where do I start? There's I would say there's a whole lot of analysis out there, but these are some of the steps that you might want to follow, okay? The first one, of course, is fundamental analysis, which is news. I'll definitely explain a bit more about it later on. We do have technical analysis. We have sentimental analysis. We have also market interaction and correlation. Okay, I'll explain that as well. Then we have macro factors. Okay. Then we have, of course, like risk management, which is very, very much important, especially if you are trading. Then, of course, the last one is continuous trading, learning rather. Now, for me, trading feels like, let's say, learning how to dance. Each and everyone needs to have their own rhythm, Like, for instance, we can have everyone here, great speakers talk about trading, but if you don't jump in and do it yourself, you won't find your own rhythm. Like, for instance, Michael Jackson can come teach you, let's say, moonwalk, but you won't do it exactly as he does. You need to jump in and do it, right? So that's what trading feels like, okay? Now, what is fundamental analysis, you may ask? Fundamental analysis is simply news. Like I said, we normally trade news. Every action has a reaction on the financial markets, okay? Now, we normally look at economic indicators, news events, as well as geopolitical events, like what's happening right now in Russia, Ukraine, also Israel and Gaza. That actually affects the markets, all right? Okay, so there is a whole list of websites that you can actually go check out. I've actually highlighted the two which I really want to focus on today. The first one is investing.com. I think everyone knows about investing.com, right? Then the second one is Barchat. By the show of hands, how many of us have actually had Barchat or have actually used Barchat? Anyone? Okay. Forex Factory, Yahoo Finance, Finviz, Bloomberg. Finviz is actually good if you're trading stocks, okay? And of course, MarketWatch. Okay. Now the question is, what is technical analysis? So technical analysis, of course, involves price actions, like for instance, price charts, patterns, support as well as resistance lines, and did I mention trade lines? Yeah. Okay. All right. So this is how charts normally look like, right, guys? There's a whole lot of I'll say chart types, right? Now each chart, of course, has, I'll say, characteristics. Okay. And we've got head and shoulders. So for those who don't know, when the market moves, it forms like charts. Okay. Let me just explain quickly. Just for instance, we have what we call a double top, right? It has a characteristic. It has two heads, a neckline, as well as a retest, and it moves in your direction, right? So those are the kind of characteristics that some of the charts do have. So when the market moves, it forms different chart patterns, all right, which are the ones that we just spoke about right now. This is how they look like, and of course in the market this is how they look like, right? We also have, like for instance, this is opposite of, this is the double top, and of course this is the double bottom. Similar, we have the two bottoms, and of course the breakout, retest, and direction. Like trend lines, like I say, trend lines, they simply help you. They help you know or understand where the market is headed. Like for instance, we have this one which is a downtrend, and we have this one which is an uptrend. Okay, simple stuff. Now the fun part integration of fundamental and technical analysis. Like I said, I've been in the industry for some time, and I've had the privilege of speaking to so many traders, first time as well as pro traders alike, right? Yesterday I was sitting over there, and there was a gentleman with not a laptop but iPad. He had on a chart, with, I think there was Fibonacci there. There was the zigzag Elliott wave. There was what else? Like the Bollinger Bands, Now, I asked him, I'm like, he told me, it's like, the market is supposed to go up from here. Then I'm like, based on what? It's like, according to my chart. It doesn't make any sense. You can never say you want to trade, then only look at only one, analysis, which is, let's say, technical, right? You need to look at both, fundamental as well as technical. In that way, you make your own informed decision, like it makes sense, right? Okay, so these are the 5 steps that professional traders normally take in order for them to make an informed decisions. Of course, which is the first one is fundamental analysis, which is news. Like I said, news is like every action has a reaction on the financial markets, right? But then we also have technical analysis, which are your charts, trend lines, support as well as resistance lines. Then after that, you have to compare your findings. Once you have your information, your fundamental as well as technical, compare them. Then the most important one was risk management. Personally, when I was starting off, I used to trade without risk management. And for me, that was gambling. You need to have your stop losses, your take profit, your trailing stops, and so on and so forth. Then from there, you have to monitor as well as adapt. Okay? Okay, a bit of fundamental analysis. Like we said, it's just simply news. And there are so many great websites that you can actually check out for fundamental analysis. Okay. Now, one of them, which is well known, is Economic Calendar. Okay. On what you call investing.com. Now, this is actually a great website whereby it shows like different currencies, the news, as well as the impact, the impact is the three stars, the stars, it shows by the stars. Like if it's 3 stars, it's like high impact, okay? If it's 1 star, there won't be much volatility on the financial markets. This is like a basic website that you can actually check out, news or fundamental. Now, how many of us have actually used or saw this website? Okay, at least we've got, that's amazing. For those who don't know, this is a great website as well for fundamental analysis. I've been using it for some time. So basically, this is a regulatory body in the US that requires large speculators as well as large speculators or investors to report their open futures. Now, in simple English, is they have to report what they have bought and sold, okay, in terms of like the asset class. Like for instance, they're divided also into 3, the commercials and the non-commercial and the retail traders, right? Now they have to report what they've bought. Like for instance, bank, they have to report that, okay, we have actually bought maybe JPY, right? Or maybe they've bought, I don't know, whatever currency. They have to report, okay? So this is very useful because it gives also an insight what big guys are actually doing. And these are the guys that actually move the market. Okay. So this is a very useful website. And this is how the report looks like. Okay. Let me just have some more. I know, it looks very scary, right? Now, as you can see, we have the Japanese yen at the top. Then we have the non-commercial. Like I said, the non-commercial, these are like, I would say, hedge funds, private, investors. They want to make money as in like now. So these are the people that I normally follow because they want to make some monies now, right? Where else the banks are looking at long-term, right? Like for instance, we can see here on under the commercials, there is over 244,000 buys or longs. Okay, now the commercials are the banks. They've already bought. And if you can look at the Japanese yen right now, it's somewhere down there, but they've already bought. However, if you look at the non-commercial, these are the guys that really wants to make money as well. Like for now, they have actually sold 200 and I think 88,000 shorts. So they're selling. These are the guys that actually wanted to make money now. So where else the banks is long term, the non-commercial is like short term. They want to make money now. Simple as that, guys. All right. So now this is the scary one. There's a great website also called the Bar Chart. It actually simplifies everything. Okay. Same numbers, guys. Simple. There's short and of course there's long, right? Japanese yen we can see 200 and something. The commercial, non-commercials have virtually sold, and of course, 40,000 they've bought, right? So it's a great website, like I said, I've been using for some time, and it's very useful, okay? Now, after you have done your fundamental as well as technical, your fundamental, we jump into technical, okay? This is where, of course, you draw your, your trend lines, support as well as resistance lines. You include your stop loss as well as your take profits. All right. So as we can see here, I think this was what Bitcoin. It had actually formed a formation, a cup formation, and if you look at it now, I think it's actually moving up, right? All right. So from after you've done your fundamental and technical, you have to do your comparison. Okay. You compare your findings. All right. Okay. This is the most important one: risk management. Like I said, over the years that I've been speaking to so many traders, they don't actually make use of stop losses, and that's a problem. In that way, it feels like gambling. You need to treat trading as a business. If you don't treat it as a business, it won't reward you as a business. You need to have a stop loss. You can't just simply say, I want to trade, because there's a lot that happens in the financial markets in a short space of time, right? Now, stop loss, of course, we have a lot of, I would say, techniques that you can utilize. The first one, of course, stop loss orders, trailing stop loss. So basically, trailing stop loss is like when you dip profit, it follows your trades. If the trade goes back, it closes automatically, protecting your monies, right? Then you have your stop loss order, which of course protects your money. Should the market goes against you. I wish I had enough time to just go through almost everything. Of course, like we have take profits. Risk-reward ratios, position sizing, which is important. When you open 0.01, how much is it in rands? You need to know that. In that way, you'll be able to calculate how much you're willing to expose on the markets, right? Of course, monitoring, you have to monitor your trades. Overtrading, you need to avoid overtrading. Hedging, it's very important as well. Maintaining discipline, and of course, you have to adapt, right? Now, this is the last one that I had to add because I felt like it's very important. Now, there's so many risk-reward ratios, right? And I feel like most traders, especially African traders, don't know much about it, right? Like, for instance, myself, I prefer 1:3 than 1:1, because 1:1 is like scalping, So you need to win at least 51% of trades, whereas 1:3, you need to win at least, 26 out of 100 trades, which is good. It makes sense, right? So, from there you have to monitor and adapt. By monitoring and adapt, of course, is you move your, let's say, for instance, stop loss to your entry level, should the market be in your direction. In that way, you have a risk-free trade, okay? So, looking at the time now, it's actually up and my presentation is done. So, guys, in short, trading is just like dancing. You need to jump in and do your thing. And each and every one of us have their own rhythm, right? So go out there and, of course, find your rhythm. Thank you so much.